Welcome back to the Wealth Fact. For decades, space was a playground for billionaires and governments with bottomless pockets. But with the recent SpaceX IPO with a potential of over $1 trillion, space is now a line item for many companies to come. We're going to talk about who owns the dusty rocks of space, how we tax this stuff, and why your next high yield bond might be backed by an orbital slot. Let's talk about space economy. The first topic I want to cover is orbital depreciation. On Earth, if you buy a $500 million factory, you expect it to stand for at least 40 years if you maintain it. It's a fixable asset. But a satellite is a vanishing asset because of the atmospheric drag in low Earth orbit, or LEO. These satellites have hard expiration dates. They literally are designed to burn up in 5 years. Low Earth orbit is where Starlink, Cooper, and most Earth observation satellites live. It's technically the upper reaches of our atmosphere, which there are still molecules up there, and every time a satellite hits one, it loses a tiny bit of velocity, and that's called atmospheric drag. In accounting terms, this creates a sinking asset. Unlike a building on Earth where you can replace the roof or paint the walls to maintain its value, you cannot fix orbital decay that easily. Once a satellite drops below a certain velocity, its useful life is basically over. You're looking at a $500 million asset that has a lifetime before crashing down. So, how do you even value that? You have to generate enough cash flow in those 60 months to not only recoup the $500 million, but also fund its replacement on its launch pad already. Here on Earth, you buy land because they aren't going to make more of it. But in space, you buy orbital presence knowing that it's basically a sandcastle in the beach. Every day, it's getting closer to its destruction. And if you think about the math, a $500 million satellite has a 5 year lifespan. That asset is vanishing at a rate of $8.3 million per month. That's nearly $275,000 a day just vanishing. And these satellites come at additional costs when they crash. It used to be that you could leave a dead satellite up there for 25 years because no one really cared at the time. But as of late 2024 and throughout 2025, the FCC has a 5 year rule that became the law. If your satellite stops working, you have 5 years to get out of orbit. And this creates like a debris fee. That new orbital regulation now requires end of life escrow that you have to prove at the moment of launch you have enough fuel and capital to deorbit that asset responsibly. We're seeing insurance premiums spike because of orbital congestion. If your satellite is drifting into a sovereign slot, that legal liability can be insane. We're seeing companies carry negative salvage value on their books because you can't sell these satellites for a fee. You're basically paying to bring it down to Earth, even though it becomes worthless at the end of its life. We're also seeing a new type of service called orbital servicing, where companies like Northrop Grumman, with their mission extension vehicles, are essentially providing life support to these satellites. They dock with a dying satellite and take over the steering. This is a form of like capitalization repair. They pay $50 million for this service to buy another 3 years of lifespan for that $500 million satellite. And it's the first time in history we're seeing a mechanical extension of a depreciating asset that's above 300 miles above us. So, what does it mean for you? Well, you don't have to look at the cool factor anymore. You can actually start looking at these satellites that are going to be launching and probably streamed online. But moving on to our next topic about the heart of the void. On Earth, AI has a thirst problem, consuming billions of gallons of water for cooling. In 2026, the tech giants are looking for a drier and cooler solution, and they're talking about space data centers. Everyone thinks space is cold, and it really is, but it's also a vacuum. On Earth, we use fans and water to move heat away from servers. In a vacuum, there is no air to carry the heat away. You can only get rid of it through radioactive cooling, but the thermal economics are pretty brutal. To keep an AI cluster cool in space, your cooling hardware ends up weighing more than the computing hardware itself. We're seeing a shift from thermal rights to becoming as valuable as computing power because you aren't just paying for the chips, you're paying for the right to radiate the heat into the void. And we've seen it all in movies. Space is a frozen wasteland. And while the ambient temperature is near absolute zero, space is also the world's most effective insulator. It's basically a giant thermos. On Earth, we have massive data centers with fans, liquid cooling, and ambient air. We move heat through convection. But in vacuum, since there's no air to move, there's no wind to carry that breeze from the GPU, it might be a problem. In 2026, it's expected to launch the first orbital server trials, and they're trying to get over the big AI revolution bottleneck of cooling these chips. There will be a massive cost though. On Earth, the cooling infrastructure is basically a utility bill and transportation at most. In space, however, it's about the launch cost. To keep a high density AI cluster from melting itself into a slug, you need a massive radiator fins to basically bleed out the heat into the void. And its cooling hardware often weighs 3 to 4 times more than the actual computing hardware itself. And when you're paying per kilogram to reach orbit, your most expensive assets aren't going to be these brand new NVIDIA chips. It's actually going to be the aluminum fins attached to them. And it basically has changed how we value these companies that are no longer going to be about a teraflop per watt, but how much it costs to launch these cooling systems up into space. Companies like StarCloud, formerly known as Lumen Orbit, are testing pizza box modularity. Instead of one giant server, they are launching thousands of tiny ones, each essentially a giant radiator in a tiny package. And as low Earth orbit gets crowded, we're also seeing a new commodity in the market, which is thermal rights. Imagine you have two data center satellites orbiting close to each other. If your neighbor radiates enough heat, they are effectively warming up the environment and making your slot warmer than it is, making it less effective in its cooling. And we might start seeing legal disputes over thermal interference. We're moving towards a market where you don't just buy slot in the sky, you buy the right to dump a certain amount of heat in that slot. You're basically paying for the privilege to be there. And you might ask, why bother? Why spend millions to launch a server into a vacuum where it might be prone to overheating? And the answer is pretty simple for most things. This can be for data havens. If a server is orbiting 300 miles above Earth, it exists outside traditional boundaries of any nation. And for a company handling sensitive global transactions or encrypted AI models, being off planet can help with that. We're in the cutting edge of computing, and consider Earth observation satellites. They capture petabytes of data every hour, sending that raw data to the ground station, processing it, and sending it back up, which takes too long for high frequency trading or military drones. By moving the computing data center closer to the sky, it can process the data at that moment and send the final answer back. Also, traditional security is pretty difficult to social engineer your way into a satellite to gain physical access to its data. You would basically need a rocket, and no one really has the money to go through that whole process. And moving on to our third segment, which is about space bonds. In 2026, smaller nations realize they can't afford a space program, so instead they're issuing sovereign space credits. They're selling orbital real estate. You see, there are only so many slots in the sky where satellites can sit without hitting each other or losing a signal. We're basically seeing companies bargaining with these governments and corporations. Nations staking claims on orbital paths and leasing them to private companies. If you buy a 10-year space bond from a nation state today, it can be backed by the projected rent of these orbital slots. And the sky's getting crowded, so it might actually be worth it. For years, the space race was a billionaire's game. If you were a smaller nation, you basically couldn't compete with any of these bigger companies or even these bigger nations. You were effectively locked out of this whole era because you couldn't afford a $10 billion launch program. However, these nations discovered something just as valuable that isn't from the ground, but is still a resource that's directly above them. Through the ITPU, which is the International Telecommunication Unit, every nation has right to equal access to space. Smaller countries are now issuing sovereign space credits that they aren't launching rockets, but they're monetizing the right to their slots. They're saying to these giants like SpaceX and Amazon, You have the hardware, but we have the legal right to this slot. Take me out to dinner. People think space is infinite, but financially, it's pretty cramped. There's only so many slots in the sky where your satellite is even viable. Think about it like a crowded beach. You can't put your towel anywhere if you want a clear view of the water and enough room to breathe. In orbit, if you're too close to the satellite, your data gets noisy. So these clean coordinates are pretty finite. They are the orbital real estate, and your local agent is the government talking to you about location, location, location. The most valuable real estate in the universe right now is the geocentric belt, the GEO. This is a thin ring around Earth's equator where if you put a satellite there, it stays fixed in one spot over the ground. Approximately 1,800 geocentric orbital slots are available for satellites, located about 22,000 miles above Earth's equator. You can't just park a satellite anywhere you want. They have to be spaced out so radio frequencies don't bother each other. Think of these slots as a radio tower in the sky. A prime slot over North America or Southeast Asia is seeing a fair market value of around $50 to $150 million just for the right to be there. Not the equipment, nothing else. Just the right. And the slots in low Earth orbit are even crazier. We used to think that low Earth orbit was fairly empty, but now with Starlink's 9,000 satellites and thousands of other satellites, we're seeing basically orbital crowding. And the ITU is essentially the world's most stressed out zoning at the moment. They're managing a backlog of over 1.7 million satellite filings. Many nations are staking their claim for these orbital paths and they're leasing them out to these companies in exchange for infrastructure, connectivity, and most importantly, cash. We're seeing orbital paths for private companies that own the hardware, but a sovereign nation owns the right to be there. For the investors that have birthed a brand new financial instrument, where if you buy a 10-year space bond, it's backed by the country's tax revenue and maybe its production of the satellite that it comes from. You're basically buying a piece of rent from these big satellite companies. And it's basically like buying real estate down here. And for our final topic, we're talking about asteroid mining. We're currently watching the first retrieval mission tests that are anchoring on mineral rich bodies. A single asteroid could hold more platinum group metals than all of humanity has ever mined in its history. And there's a legal question. Who will actually own it if they land? In 1964, there is the Outer Space Treaty, which says no nation can own a celestial body. And we're basically operating under this 60-year-old document. It's a Cold War relic that states no nation can own it. It's designed so the US and Soviet would not plant a flag and claiming the moon as their 51st state or a new republic. However, there is the Artemis Accord, which says that you cannot own the asteroid, but you can own the stuff you dig out of it, which has carved out a brilliant and kind of controversial loophole. And the logic being that you can't own the asteroid itself, but you can place a fence around it and call it your land, which you can own the resources you extract from it. It creates a financial difference in terms. It's like the ocean. No one owns the ocean, but the fisherman owns the fish it captures from it. But what happens when companies successfully bring back 10 tons of platinum? Will the platinum price on Earth crash? On Earth, we mine platinum group metals with tiny margins. In space, these asteroids are essentially giant floating chunks of high grade ore. Astroforge claims the margin for asteroid mining could be as high as 85%. And it's not talking about just making it into jewelry. You can't build a carbon neutral future without massive amounts of silver, nickel, cobalt, and lithium. Asteroid mining right now is valued at $2.5 billion. By 2030, analysts expect it to double, and it's shifting from exploration to infrastructure. And it's no longer about if we can get there, it's about how much the bill will be. From an investor point of view, if a company finds a $5 trillion worth of platinum asteroid and brings it back to Earth, the company isn't worth $5 trillion. If you bring that platinum back to Earth tomorrow, you wouldn't become the richest company in the world. You became the person who crashed the platinum market to zero. Because wealth isn't about having the stuff, it's about scarcity of that stuff. If platinum becomes as common as iron, it becomes just as cheap as iron. You effectively bankrupted your own company, and all that success went to waste. Everyone talks about a $10 trillion asteroid to become rich, but many others believe that the wealth will come from water. Think about it. It roughly costs $1,500 to $2,500 per kilogram just to launch water from Florida into orbit. But if water was mined from an asteroid and you can split the hydrogen and oxygen right there in the vacuum, you suddenly have a gas station in the sky. This is why the asteroid mining market is sitting at $2.5 billion today. We aren't just looking for treasure anymore. We're looking for the possibility of a gas station to power missions to Mars. The real wealthy people from this new space economy aren't planning to dump their massive haul onto the London Metals Exchange. They're looking to be more like De Beers style of supply management, where they'll store the metals in orbit using those space data centers we talked about earlier as vaults and release the metals into the global economy ounce per ounce to keep the price stable. And also, a final point, which is a random fact, we're also seeing the rise of space bioming. Instead of using heavy machinery, scientists are testing bioleaching microbes, microbes that literally eat the rock and poop out the metals that it was consuming, making it cleaner, lighter, and doesn't require as much equipment to mine these asteroids. Well, that was it for today. Thank you for listening. Until next time.